Welcome back to Financial Time in the Car Line. Let's talk about auto loans. Did you know that you can negotiate your rate at the dealership? The majority of banks that actually send back a call to a dealership is called indirect lending. I know this because I worked in the industry for over 10 years. I have over 25 or just about 25 years banking experience, and now that I am no longer with the institutions, I can give you the insider tips and tricks. So when you go into a dealership and you fill out your credit application, hopefully at that point you already know what your credit looks like. I don't recommend to go into Credit Karma. There's nothing against Credit Karma. It's a good tool for you to use to keep track of your accounts. However, it's not always very accurate. Banks typically use an internal score. So they will take your credit score or your credit report, run it through a filter, and generate a score internally. That score is more reflected on websites more like Equifax.com. So if you go to Equifax.com, this is not a paid promotion. I have no affiliation with them whatsoever. But if you go to Equifax.com, you can sign up for their free service and you can actually get an updated credit score every 30 days. It'll give you a full breakdown, and you can even do the premium service, which I think costs anywhere from $9 to $19.99 a month. I'm not sure, but you can go in there, check your score, and then whenever you're ready to shop, you figure out how much you can afford. If you can afford $400 a month, just plug it into the car loan calculator down below. Figure out how much of a loan that would be. You got to factor in tax, title, and tag. Now, once you figure out how much dollar amount that you can afford every month, it'll then spit out a number that says, hey, this is the loan amount that you can afford. You're going to ask term. 72 months, 75 months, 84 months, 60 months. What do I choose? Where do I go? 84 months is mostly reserved for cars that are anywhere between brand new and typically 4, sometimes 5 years old. Some banks will offer you loans 84 months on 6-year-old cars, but they're tough to find. They're more like your credit unions. 75 months, again, brand new cars all the way down to 5, 6 years old. Sometimes even 7-year-old cars, you can get 75 months. 72 months and 60 months are your normal terms. That's where the banks consider they pretty much will do 72 or 60 months almost on any car. When I say almost, I mean, they're not going to give you 72 months on a 15-year-old vehicle. It's going to be very, very hard to come by. So once you figure the term out, you plug that information in, you then know exactly how much of a vehicle you're looking for. So let's say you qualify, you could afford X car payment, and then you figure out, okay, that's $20,000 out the door with tax, title, and tag. So you just got to figure out what your state tax is, and on that calculator below, it'll actually show you. Select your state, and it'll show you what the percentage is. So just work backwards. If it's if they're saying you can afford $20,000 out the door, which is your tax, title, and tag, then just subtract the taxes and title, and then you can figure out exactly how much of a vehicle you can afford. So let's say the taxes are, I don't know, let's use round numbers, 10%. So 10% of $20,000 would be $2,000. Subtract it backwards. Now you're shopping for an $18,000 vehicle. So you know what your dollar amount is. You know what you can shop for. Go to a reputable dealership website if you want. If you know one in your area and you want to shop with them directly, or go to the multitude of websites that offer car buying. You can go to CarMax. That's a dealership, but they have a nationwide website where they can actually ship cars to you. Go to autotrader.com. That gives you an option to buy from private sellers as well as independent dealerships as well as franchise dealerships. Go to cars.com. Go to, Car Guru, I believe it is. Any one of these websites will have a multitude of automobiles. Facebook Marketplace is another place that you can shop for vehicles. A lot of sales guys at dealerships nowadays are advertising social media through Facebook, Instagram, YouTube. I follow a bunch of car guys in my area, and they sell a lot of vehicles just by advertising on Facebook Marketplace. So now you know what you got. Head on into the dealership, ask for a test drive. Before you go in, make sure the car is still available in stock. And if you're calling on Tuesday at 1 p.m. and say, hey, is the car still in stock? Oh yeah, the car's in stock. All right, cool, I'll be there Friday to test drive it. 9 times out of 10, that car is gone by the time you roll into the dealership on Friday. And then you're already there, and I don't want to say you're going to get suckered in, but the dealership, when they have someone come into the dealership, their objective is to not let you leave until you buy a vehicle. That is their sole purpose, to sell cars. So when you go into a place like a restaurant, their sole purpose is to serve you food. They're going to do everything in their power to make sure that you don't leave until you get a plate of food that you have to pay for. Same thing with a car dealership. So just be prepared. The more prepared you are, the better it is. I'll be honest with you, I've never bought a car that I just walked into a dealership and said, oh, well, let me test drive that. It was always, here's the item number or the stock number, whichever the dealership listed as. It's, oh yeah, it's in stock. All right, cool. I'll be down there in 10 minutes. Because, right, I'm asking the questions. I'm already prepared. And this is what I want you to do. I want you to be prepared. I want you to call, and then I want you to be like, oh, I'll be down there in 20 minutes. I'm leaving right now. Because you already know your credit. You already know your credit score, right? We already talked about that. You already know how much you can afford. You know the vehicle's listed for $18,000, so you know it's within your budget. And you know that you can probably get a 72 or a 75-month rate, maybe an 84-month rate if you need the payment to be a little bit lower. There you go. Boom. You're heading down there. Now you're in the dealership. There's 2 parts to the dealership. There is the sales team, and there's your finance team. F&I, finance and insurance. The sales team is to sell you the car. They're going to get you in the test drive. Do you like it? Can we work it out? Yada, yada, yada. All right, let's fill out a credit application. They'll take your credit application. This is where you give them your income, your date of birth, social security number. They're going to run your credit score. They're going to bring it back to the F&I team, finance and insurance. The finance and insurance team is then going to submit it to banks. Here is where you need to be careful. You need to say to the salesperson, I want to speak to the finance manager before he starts submitting it to banks. Because if you have a relationship with, who knows, Bank of America, Capital One. I financed 3 cars through Capital One before, and I'm trading in a car right now from Capital One. I want to go through Capital One. They'll probably give you a more favorable rate than, let's say, I don't know, Wells Fargo, or let's say at a credit union down the road. They'll still judge you as an individual due to fair lending laws, but Capital One will probably judge you a little bit more lenient, let's say, or favorable. They might look at you and be like, oh, this is a borrower that has paid us back not once, not twice, but 3 times. So let's give them a 4th loan. No brainer, right? And then the underwriters will get it done quick. If you don't tell them who to submit the loan to, or you don't have an idea, they're going to take it back, run your credit, see that you're a, let's just say you're a 580 Beacon.
It will. At least the pre-2007.
My bad. Sorry about that. My YouTube popped on. But if you're going to go in there and they're going to run your credit and they're going to see you're a 580, 590, 560 Beacon, 620, whatever it may be, they're going to say, ooh, I know the best bank. And they're going to submit it. These guys are not bankers. You have to understand that. I've known the auto industry for over 12 years, and they are amazing people in the auto industry. But F&I, they are not bankers. They do not, I'm not saying they don't 100% understand what banks do, but their job is to provide you financing of the vehicle and insurances on the vehicle. They don't understand the underwriting processes that internal bankers do. I worked for the Big Red Bank. You can guess which one it was. And we had an internal process that was very subjective. And the dealership would sometimes just shotgun loans over. And my people, as a credit manager, they were seeing loans 410 Beacons. And our lending program only went down to 560 credit scores at the time. I'm like, what are you doing submitting a 410 Beacon? Well, the customer, they had a prior paid auto. That still doesn't fit our program. So you've got to be very careful when you're giving your credit score information to a dealership, because you have to make sure that they're going to be submitting it to the right banks that you want. Now, if you're a 410 Beacon, it's going to be hard to get approved. You'll get approved, but it's going to be through a major subprime bank. But that's the whole discussion you want to be having with the dealership. So once you're in there, it's time for finance and insurance. They pick the bank. They say, we got you approved. Go over the contract line by line. There's going to be things in there they're going to slip, what they call a pack. And they're going to say, oh, we already put Simon Eyes on the car. No. I don't want any products on the vehicle other than what I choose. A lot of times they'll try to put LoJack on the car. take it off. You can take the low jack off. The biggest thing with F&I insurance is that they need to sell product. That team, those people, men and women that work in the F&I offices, make 100% commission-based salaries. That's it. They don't get paid hourly. They don't get paid a yearly salary. Their quote-unquote salary is a 1099, 100% commission-based. So if they don't sell product, warranties, gap, maintenance, they will not make any money. So when you're in there, you got to figure out where your loan stands. Where's the loan to value? Is the vehicle, you got to figure that out with the finance. Ask them, say, how much is this car worth? But there's a link below to JD Power where you can actually research the vehicle prior to going in, and you can actually see what the vehicle is worth. So if the vehicle is worth 20 grand and they're selling it for 30, time out. that's 100. I mean, that's 150% loan to value. That's insane. No vehicle's worth 150% loan to value, especially if you're not trading anything in. So you got to make sure you know the worth of the car. So let's say the car's worth 20 grand and they're selling it for 18. Oh, you're in a $2,000 equity position. Good job. So now you have room to add some back-end products, warranty, gap. That is up for you to decide. If you're anywhere over 105% loan to value or 100% loan to value, I thoroughly recommend gap. Because if you crash that car, the insurance company is not going to pay the full value of the vehicle. They will fight you tooth and nail. Gap insurance covers that accordion. So if the car's worth 20, you crash it, and you have a loan on it for 20, but they only want to give you 15 because of the depreciated value, you still owe the $5,000 to the bank. However, you can always purchase that gap insurance, and that gap insurance will pay that accordion, that $5,000 gap. I call it accordion because I picture a gap insurance going like this, and closing the gap from your loan value of what they're going to give you when your car gets totaled to actually what you owe. That gap will close in and they'll pay it off. So I hope this helps explain some of the things. It's up to you to look into warranties, that kind of stuff. So if you feel you need a warranty, 100%. If you're buying a new car, the warranties nowadays are insane, 60,000 miles, whatnot. But financial time in the car line is over because my kid is getting out of school and I'm getting yelled at to pull forward. So y'all have a great day.